I had a meeting with the guy the other day, and this was a prospect I'm talking to, and he's really one of the first ones that laid this out accurately. He's like, you know, Kelly, the insurance doesn't cost anything. Well, why don't you explain to me what you mean? And here's what he said. We were looking at his illustration, and he said, okay, look at this first year. And what was his premium? I think it was like 75, maybe 75 grand. We were illustrating for him a year, an annual premium. And I don't remember the exact, let's just say first year he had available 20. He doesn't have all of his money available year one. But he said this isn't me. He goes, so I put in 70, I have 20 available, and that bought me, I think it was like 1.4 million of insurance. He goes, so that 1.4 million for that first year cost me 50K. And I'm like, okay. And then he said, and now look at year 4. When I make my premium, I get more in cash value than my 75 grand. So I put in 75 and I got credit for about 78. So now I'm up on that year 3 grand. I'm still behind on my total contribution compared to what I have in cash value, but that particular year, how much did that insurance cost me now? I know where you're going. Hey Kelly, what happened to your hat? I don't have my hat today. And then once we got out a little bit further, when we were like year 7, 8, or 9, whatever it was, and he goes, and now I've put in 75 grand, I think it was year 9. I put in 75 grand over 9 years, and I have more than my contribution in cash value. And I'm sitting on about 1.7 in life insurance. How much, Kelly, does that cost me now? And I'm like, well, according to your analogy, it costs you nothing. Now, some of you might be like, dude, it's lost opportunity cost. Look what he could have done over that 9 years. He could have bought the term, could have had that. Whatever. I've already dealt with in a video of this a couple times to show you the rate of return that you need in order to equal the distribution capability of life insurance. So this guy got it. He completely understood it. So the way he saw those first few years was him leveraging some asset to offset a risk. So he was leveraging that 75 grand every year to slowly build that cash up to where he gets everything he's put in, but also to buy the life insurance just in case. Was he willing to give up a little bit of that liquidity to create that protection? He absolutely was. And now you start to span that out over longer for him, and boy, I tell you what, good luck competing against it. But I loved his mindset. When he said that, I knew where he was going. Kelly, how much does that cost me? I'm like, oh, I hear you. I know where you're going. I've had this conversation with people before. But it was really refreshing to be working with somebody who understood it, because when you do it right, it really doesn't cost you anything. So look, if you find this valuable, please like it, please share it, please leave me a comment, and go to financialcaffeine.com. I've got an audio book on this. I've got a video you can watch of me on a whiteboard. And if you want to meet, you can go to financialcaffeine.com/survey. You can fill out some information, get on my calendar. I'd love to be a resource for you. Don't forget, God loves you, thinks you're special, and all that he wants is for you to love him back. That's it. So know that you're loved, know that you're blessed. Have a great day.